Welcome back to the Always Thinking Mindset channel, where we give you positive vibes and simple rules to achieve your goals. Now, in today's video, we're here to speak on home equity. What is it and how to use it? Now, before we begin, a simple request is to like this video because it does help the algorithm. Don't worry, you don't have to be subscribed, no big commitments here. But if you like the channel, you already know what to do. All right, let's go ahead and begin. Now, what is home equity? That's the big question, right? That's what everybody has to accumulate, especially in real estate. So, what is it? Let's get to the definition. It's pretty much the difference of what you owe, which is your home mortgage, and minus how much you've actually paid into. That in itself is equity that you've retained. Now, obviously, it's called home equity. You cannot do this with an apartment. An apartment you're leasing, renting. You don't want to be responsible for anything, and at the same time, there is no equity. You're not owning the property. So, home equity, what it pretty much comes down to is, you paying down the principal, and whatever you pay down the principal, you actually own. Let me give you an example. I like to keep it simple, so we're going to keep this simple as possible. So let's say you buy a house for $100,000. Whew, I wish I could buy a house that low. But anyways, for this scenario, $100,000, you pay down $75,000, right? So your balance is $25,000 left. Now, the equity you have in that home is $75,000, right? That's what you owe. I mean, that's what you actually own, which is called home equity. The leftover principal or equity, you have left over is what it's going to help you for future purchases. Now, you got to understand home equity is one of those things that you have to use responsibly. Please consult with anybody before you make any big financial decisions, such as purchasing a house or actually taking home loans out, HELOCs. And I'll get into that for in a second. But I wanted to speak on what is home equity, right? Because to me, if you ask an investor, they're going to say how much equity you have in the house, and they will give you a number, but they know it's useless because they can't really liquidize it. What that means is you cannot just automatically pull that money out. It's actually sitting. It's an asset appreciation, which that means you have to sell the house, and that usually comes with time, money, effort, and it's not quick to grab cash out of it, but you do own it, right? And through time, not only let's use the example again, you bought the house for $100,000. Through time, it appreciates, and at the same time, you're paying it down. So within that time frame or that gap is all the equity you own. So let's say the house goes up $120,000, right? And at the same time, you're there and you're those $20,000 of what it's appreciating is now going into your equity. So your equity is getting bigger. And this is the beauty of real estate. So at the same time, home equity is one of those things that you got to be responsible about it. It is your money, but at the same time, it's not liquid money. It's not fast cash accessible. But this is a great example of why you should get real estate because through time, it builds your portfolio. You have better options. You have more collateral, and collateral is exactly what the banks want, right? They're willing to give you money because now you have a appreciating asset that they can seize in case you default on the loan, which is not good, but at the same time, you're able to do more things with it. Now, which leads me to the second rule and how we use it. So the way we use home equity is the most basic common way is to take out what's called a HELOC. HELOC stands for home equity line of credit. It's usually through a bank. The bank says, okay, such and such, you have this house that's $100,000. You paid 75,000 down. You still owe us 25,000. But because you have that $75,000 in that, we're willing to lend you that. Now, there are ratios, right? They're only going to lend you a certain percentage of that loan because at the same time, they don't want to take 100% responsibility on a loan that they're going to willing to give you. Now, HELOCs are very important to actually not only research, strategize, but you have to use it responsibly because think about it, it's a loan. you're taking out a loan on a loan, right? And some people take out loans to do whatever they want with them, but they actually get more in trouble because they just keep piling on loans. And there's a way around it, and that's for another video. But at the same time, that's a way to actually take the equity out of your house. Now, also, I want to speak on home equity loans. A loan is pretty much saying that here's the money, we're willing to lend you. This is collateral. We'll take your property if you default on the loan. And it's a pretty standard loan. The difference between that and a HELOCs, you don't have to pay in that moment. The greatest example they use is it's sort of like having a credit card, right? They give you a credit card and it says you have X amount of credit on this, please use wisely. And they can call the loan. It might be a year, 2 years, whatever the contract states, whatever agreement you get within the bank, and you have to pay interest on top of that. But HELOCs are more of think of a credit card, while the home equity loan is actually, the whole lump sum in reference to home equity. Now, you got to understand how we use home equity in the house, right? Because the name of the game is to leverage, right? Use somebody else's money to go make more money. And that's what you've been taught. Now, the great thing with home equity is that, let's say you don't want to just buy houses, you want to buy a business. Beautiful. Banks love this. Whenever you go and apply for a bank and say, hey, listen, I need X amount of dollars to buy this business, the first question they get into is, do you have assets, right? What are assets? Well, all the property you own or paying into. And then the second question, well, how much do you owe, right? Which is the line of home equity you have within those properties. When I was trying to buy a business, the first thing they asked me was the personal financial statements, and it kind of goes through this list of where you're at, what's your income, what's your debt to income ratio. But then on top of that, it listed assets, and it pretty much described, do you own these properties? Where's the amount you owe? How much have you paid into? And that's the difference, because that amount, they want to know how much is free and how much they're willing to lend you. So this is a beautiful reason to own real estate, because at the same time, it not only gives you more leveraging to purchasing more houses, whether it's single family homes or commercial properties, but you can actually buy a business, and businesses and banks and loans, they love those assets. They love home equity, right? They they want to give you money. They want you to have assets and collateral to back it up. Now, with that being said, home equity, you can also do, what refinancing your house, the difference of what you owe. So let's use the $100,000 example again. You paid $75,000 off. You can technically, which I don't advise, you can technically get that money out, 75,000, and pay the $25,000 left. I don't recommend it. It's pretty much a loan on a loan on a loan. The thing is, you might be in luck as far as the interest rates goes, right? Because let's say you're in a good stance of interest rates. They're relatively low. Right now, we're at 6.6. So whenever you locked in the rate, it was at 6.6. But then markets start to shift. They go up and down, and then they end up going down. And let's say the interest rate within a few number of years happens, and it's at 6%, right? Obviously, what you're going to want to do is refinance that home, because you want a lower interest rate. Lower interest rate means less of a payment. Not only that, you have the rest of the equity in the house. So that's the beauty of where it comes from and why home equity is so important, especially when it comes to houses. Which leads me to my last and final rule, which is, why does it matter? Because you got to understand, it's a loan, right? Well, home equity, in order to get a loan, you need home equity. These are collateral assets you need. And in order to build wealth and become bigger, you have to take out more loans, but you have to be responsible about it. But nobody's going to trust you, right? Nobody's going to trust you. It's just like credit. So think of home equity as being your line of credit to get the approval of the loan. Now, the thing is, like I said, is usually used to buy more assets. You can ask any real estate investor out there, millionaires, billionaires, whatever in between. They have assets, they have real estate properties, and they use that equity they have as part of their net worth but at the same time, in order to get other loans, in order to purchase other businesses. So that's the beauty of this home equity and real estate uh, atmosphere that you're in. So at the same time, the most common I will kind of go into is, we're going to use the $100,000 example again. You paid down 75,000, you have 25 left on the mortgage, so 75 is yours. You don't have to borrow all of the 75,000. You can actually borrow 60, 40, 30, whatever you need, whatever the bank is willing to give you in reference to your equity. Now, some people take out a few to do a home renovation project, to fix the bathroom, fix the kitchen. That's like the most common, right? They take equity out, which is the HELOC, and they say, give me back my money, which I'm going to owe you later. I'm going to renovate my property. And at the same time, it helps me build the equity in my house to whether I'm going to rent it or sell it. But that's one way. Another one is, you actually own equity in your houses, sort of like little mini savings accounts, I always say. Let's say you have children and your children go to college. You don't know where this money is going to come from, but you got to understand that now you have equity you can tap into, and you can refinance your house if it's free and clear, fully paid off. But you know, you don't have to borrow the total amount, but let's say, you have a kid going to college, you can pull that money out and actually use it for college, right? That's the purpose of home equity. You're able to get that loan for something else. Also, a lot of people do is consolidate debt. They get into issues where they have so much debt and they have to, you know, they have to pull the home equity out of their homes to pay off the debt. Now, Dave Ramsey will tell you never to do that, right? Because you're pretty much taking a loan out on another loan. And I kind of agree with him, right? Like, stick to your guns, pay it off, pay down your debt, but also play offense, right? Start investing. But that's neither here or there. The last thing is that because you take the equity out of your house, the government can't tax it, right? Because it's tax free because it's considered debt. You're not making, technically you're not making money, sourced income, but at the same time, it's debt free. You can't pay interest on debt, so you get that money and you get to do whatever you want with it. And don't buy a bunch of junk and dumb stuff. Reinvest that money or use it in a serious way to where you're able to build not only your portfolio but just your life in general. Listen, home equity is one of those things you got to learn how to understand, learn how to use. It's a beautiful thing because it actually increases your chances of building wealth and actually building things over time. You got to understand, you can have all the money in the world, and as long as you don't have credit or assets, banks, people will not touch you because you have nothing, right? How do you build something without a foundation? That's the purpose of the video. I hope you enjoyed today's video. I hope you got value out of it. If you did, please give it a thumbs up. It will help the algorithm. And if you like this channel, check out my other videos. At the same time, I do have a podcast. I do speak on real estate. We got other things going on, but I appreciate you watching today.